Nice to meet you,
Nice to meet you
Peter,
too.
and thank you so much for joining us at our 45th International Conference, and thank you so much for holding an interview with me.
Very happy to be here.
So just so we can get to know you a little better, can you begin by speaking a little bit about your family history and early education background?
Well, I, like you, had the good fortune to go to college at Princeton. Enjoyed my time there tremendously. Worked for a few years, then went back to your other hometown, which is Boston, and got my advanced degrees at Harvard in law school.
Early in your career, I believe you were the director for the Economic Council.
Yes, after finishing law school and having the great opportunity to clerk both at the DC Circuit and the US Supreme Court, after another interlude, I happened to meet the team that was helping start the National Economic Council for President Clinton in the White House. And again, another great opportunity to be part of an organization that was trying to do something very different, which was to really take a more holistic view of governmental policy in the economic area by the formation of this National Economic Council.
And what were some of your important roles within this council as the director?
The best thing about the NEC is that it does really cut across the different cabinet level agencies in government. So if you think about the role of the NEC, it is a role really about facilitating interdepartmental conversations for most issues, particularly in today's modern economy. Many issues may touch on whether it's the role of the trade representative, the role of the Commerce Department, the role of the Education Department. So many issues are interdisciplinary in that way.
Yes.
And governments are in decidedly siloed entities. Much the same way in academia, you might have different departments, but the real interesting challenges often are interdepartmental or interdisciplinary. Yes. And the same is true in government. The most complex challenges are ones that are interdisciplinary.
And I've heard that unlike some other departments, the Economic Council is very focused on macro and global aspect as well. So I would definitely agree with the interdisciplinary point.
Absolutely.
And then, so currently you're most well known for being the managing partner of Cartesian Capital Group. Can you explain a little bit about how you came to a leadership position within this company, and also a little bit about the history of the company itself?
Fundamentally, one of my real passions in life, I realized, is to build things. And the best part of my job at Cartesian is that we build businesses. So we'll take a business model that works in one country or jurisdiction, or business is successful in one company or jurisdiction, and expand it to others. So that gives me the responsibility, but also the pleasure and the opportunity of taking businesses that are successful and figuring out, how do you make this relevant to a new market? How do you take a business model that's successful in the US and bring it to China? How do you take a business that's successful in India and bring it to the UK? For me, that cross-cultural element is challenging and provocative, but most importantly, it gives me at least the satisfaction of building something. In the end, and you'll find in your career that there will be different parts of your personality and parts of your psyche that you want to address, and for me, building something is what motivates me to do what we do.
What are some of the criteria you use when deciding on which companies to invest in?
We tend to look at the world on a multi-decadal cycle and think systematically about what are the forces that drive global economic change on a 20, 30, 40-year basis. And then we try to identify family businesses or closely held businesses that are well situated to benefit from that trajectory. So if you think about the future of food, right? If we have to, as a global economy, as a global society, fill a protein gap, carbohydrate gap, that's a massive challenge for us collectively over the next 20 to 30 years. What are the companies that are well situated to help fill that gap? Are there fertilizer businesses or irrigation businesses or agricultural efficiency and technology businesses that are well situated to help drive that change forward? So taking a long-term view, because private equity is a form of patient capital, is for us the most important first step in finding the companies that we want to work with, is what is their long-term trajectory look like, and how do they fit into the global economy 30 years forward.
And then are there any challenges to investing in companies globally? Are there any cultural barriers or differences in policies that makes your job more complicated but also more interesting?
Well, I think you stated both halves of it, more complicated and more interesting, absolutely. And you can think about this at the most micro level, which is think about preferences for consumers. As much as consumers are converging in their overall appetites, the idiosyncrasies of how those customers prefer products, whether it's taste, delivery channel, pricing, very different. And understanding and embracing those differences is critically important to being a successful adapter of a business model to a new situation. The second, as you also referred to, is differences in institutions. So think about differences in regulation, differences in financial markets, differences in political environments. So we had, in many cases, taken a business that will operate successfully in one jurisdiction and then adapt that to other jurisdictions requires embracing all those changes, whether they're regulatory changes, legal changes, changes in corporate culture, changes ultimately in how you serve your client. That's really, actually, as you touch on, the core challenge of bringing a business international is to figure out what is the core to who the business is and what needs to be adapted to fit the local market.
Exactly, so you can't use the same model from one country and completely replicate it in another region of the world, because inevitably you'll be running into some of the conflicts or, yes.
It's a great observation, and what you're saying is true. And there was a period in the investment world where there was a sort of hegemonic or almost imperialistic approach where people thought, well, this works well in the US and the UK, so it should work well everywhere else. More and more investors, institutional investors, and asset managers are becoming more sophisticated about understanding those differences and how important it is to truly localize the content of what you do.
Speaking of international, I've noticed that you've also invested in certain companies in China. I'm wondering whether the current trade tensions between the United States and China has influenced some of your standpoints or positions on the investments you have made previously.
Two of our businesses are consumer-oriented businesses where, for us, what's happening on a macro-political basis is not affecting the day-to-day practice. Really, the question is, can we deliver value and convenience to our consumers? That's always question number one. Yes. And the overall environment, less so. One of our businesses is an industrial business, and it's influenced because it does export and it does have intellectual property that's used from North America into China. And there, I suppose, we're a little bit more exposed. On the question specifically about the broader trade tensions, I would say this, which is, one, on a macro historical basis, China and the United States need to find some reasonable entente for how to make a balanced relationship. Two, I'm an optimist, so fundamentally I believe that rational minds will lead to a constructive, mutually beneficial solution. But three, when I look at the rhetoric that's going back and forth and I look at the political culture on both sides, I think there are causes for concern. And the real hope is that the tactical dynamics, the posturing, and the terms of discourse don't get in the way of the strategic objective, which everyone shares, which is to build fair and engaged trade by both parties.
Now that we've talked about the very large and macro economy,
Sure.
I'm wondering where we can change the topic a little bit and
Sure.
talk about the schedule you lead from day to day. So can you explain a little bit about your current job at Cartesian and how it looks like on a day-to-day basis?
Well, on a day-to-day basis, we have a portfolio of about 20 different companies operating in 40 different countries around the world. So my schedule is both mine and not mine. It's not mine because you never know when a challenge is going to come up. It can be an obvious macroeconomic challenge, like, for example, we have Flybondi, which is the first low-cost airline in Argentina. So when there's political change, as there has been in the last 2 months, we have to reconsider how that affects the operating environment, the regulatory environment, and the financial environment. It can be something specific as a food safety crisis. For example, we own a steak and fast food restaurant businesses in China, and 3 or 4 years ago there was a big food safety crisis for a number of the Western quick service restaurant businesses. We weren't affected in that, but again, that's a challenge that arises. So oftentimes my agenda is set by those exogenous forces. But one important thing that I think you and your colleagues need to keep in mind is to try to make sure that all those operational issues don't crowd out the strategic priorities. So keeping a long-term view in your studies, in your career, I think is important for maintaining that balance in mental health, which is to know, fine, I'm going to solve this problem now, but my real question is, my real opportunity is, how do I address the challenge 2 months from now, 2 quarters from now, 2 years from now, 12 years from now? Having that long-term view, I think, is the most important thing one can do to maintain a healthy balance.
Definitely. And you've mentioned that you're overall a optimistic person. Do you think being optimistic has also helped you look into the long term and not feel too anxious about the day-to-day operational challenges?
I think it's helpful for anyone to maintain that level of optimism. Otherwise, the world can be a very disheartening place.
Oh, yes.
And it's important, particularly for your age cohort and your generation, because my generation is leaving some very, very large problems, particularly around, for example, the climate change. Those problems can really only be solved by people working together, working diligently, working creatively, and having hope that human beings can undo some of the problems that we have perpetrated so far. If you were not hopeful, it'd be hard to undertake that. And if you didn't undertake it, we really would be exposing the world to a much worse future than I think is possible.
So it takes a certain balance of both practicality and optimism as well for our generation to tackle this challenge.
I think so, but I mean, I'm confident from what we saw of all the participants in the conference, from you and your fellow organizers. You care, you're driven, you're thoughtful. So my generation couldn't hope for more than that. And given that we're putting a lot of problems on your shoulders, I think we all need to trust and hope that you will do the right thing.
And then speaking of some of the pressing issues nowadays, there's a trend towards investment in ESG sectors. How do these factor into the principles that Cartesian Capital Group hold? And I'm wondering whether you can elaborate a little bit more on your involvement with ESG.
We're a fiduciary for institutional investors around the world, and our investors hold us to a high standard, and we hold our companies to a high standard. From the point of view of private equity, remember that our purpose is as an investor to help grow a company and ultimately to sell the company, whether on a public market or to a strategic acquirer or to another financial investor. And as a result, what people now think of as fashionable, talk about ESG, has always been a core part of our practice. Because if you think about it, if you built a business around child labor or around prison labor, you'd never be able to sell that business. Right. So what people think of today as a social constraint or consideration really is fundamental, not just business ethics, but also good commercial sense. For us also, the same with regard to externalities. So we think about environmental externalities. In the end, all of us have studied, and since you're going to be an econ major, you'll know this, that the true cost of production of any product is not simply its intrinsic cash costs, not simply its capital costs, but what are its total impacts of production and of ownership going forward. And I think the more that people embrace that, the more that you get a better understanding of what the real economic calculus is in any production decision, whether it's producing a good or producing a service. Ultimately, you need to understand what are the real costs of that, and that needs to be the part of a calculation for any private equity investor going in, because ultimately we need to be able to sell that business to someone afterwards. And internalizing that cost is critically important.
I've definitely heard of a trend of investors internalizing the cost of these supposedly externalities because there are forecasts that maybe in the future governments will start imposing higher tax on the pollution and setting up quotas. I'm wondering whether you think there's a trend of companies starting to factor in these externalities and no longer view it as something that's completely out of their responsibility, but rather internalizing it into the company structure and trying to be more sustainable and responsible in that way.
I think there definitely is the beginning of trends in that regard, and I think that institutional investors, mutual fund complexes, socially responsible investors are all driving that forward. And the more that the consumers of those stocks hold their companies' boards and management teams responsible for that, the more likely we are going to get something closer to a true bottom line for a company, which is something that incorporates all of those externalities. It's not a fad, And as we've seen from the comments about climate change, it's something that is more than simply an aspirational value. It really is an economic imperative.
Yes.
And that's something that the investment community have to embrace if we're going to continue to be constructive members of a community. Because in the end, a business is no more and no less than another member of a community, just like you or just like myself. And to bear that responsibility in a fashion that understands everything we know about modern science and modern society means to internalize and continue to learn about all those dimensions.
I really love how you mentioned the term community of companies, and I'm wondering whether you can speak a little bit about the community within Cartesian Capital Group. I've read on your website that on average, many of the partners and analysts at your company has worked together for 12 years. How do you think this creates a positive culture at Cartesian?
The best part of my job are all those folks you just mentioned. And the reason why is you can go to a job, you can make your salary, you can make your bonus. But the real question is, if who you are is part of what you do, then you need to find the right people to do it with. And we have a group of folks who have varied backgrounds, both culturally and professionally, but what we all have in common is we love to build businesses. So this project, this joint enterprise of whether it's a restaurant business in China or an airline business in Argentina or a fertilizer business around the world, is what brings people together. So we live in a world, and you live in a world, where there are fewer and fewer bases of community in the physical sense. Much more you have virtual communities in social media and through other affiliations. But if your employment is going to be an important part of your identity, then it needs to be a common mission. And that's why I think I'm so proud to work with my team, because they have a common mission around our companies. It's not that we're perfect, because we make as many mistakes, if not more mistakes per capita as anyone else, but the mission is what makes the role meaningful and fulfilling in that regard.
Throughout your career, what are some of the biggest obstacles that you have faced, but then at the same time you gain after you've overcome them?
I've been very fortunate in my life, and I always wish young people like yourselves and your fellow conference attendees the same good fortune. I've met wonderful mentors. I've met wonderful role models. I've met people who are very generous in their ability and willingness to teach. And I would say that good fortune is something that I will always be grateful for. And if I would encourage your colleagues to do anything particular about their careers, it would to always think that some of the most important things one can do are not necessarily linear. They don't necessarily follow step by step. Sometimes you really need to be willing to think in a non-linear fashion and take a non-linear challenge. Those have always been the most difficult, but in some ways the most rewarding decisions I've made.
To end this interview, I'm wondering whether there are any advices you can draw from your education and career background to provide to students who are interested in entering the finance industry.
I didn't start my career thinking I was going to be in finance. I have a non-linear career path, and our opportunity set from our generation was very different than yours. Yours is going to be one where, between the gig economy and between the decentralization of everything from manufacturing to service provision, there's going to be so much change over the next 25 years of what it means to be a professional, and even what it means to work. And there, I don't think that my generation can give your generation real advice, because the nature of work is changing in such a dramatic fashion that it's going to trigger a set of social consequences where people have to figure out, how do I define myself if it's not but what my job is going to be? How do I think about what work is if I'm only working 26 hours a week? Is that a good thing? Is it a bad thing? How do I invest in other parts of my personality, in other parts of my skill set, to make a more fulfilled life for myself? Because work is just work. And the reality is what you do with all those passions and what you do with the time that the next wave of industrial revolution does to free up, that's the big challenge for your generation. Beyond solving the major problems of the climate that we've created for you, you have to also solve the problem of what does life look like after work changes. And that's an existential question that's almost as complex as the climate change question.
Definitely, because your generation can tell us that we should work, but not necessarily how exactly we should work and what value we can find in these work.
And the value question is the question that will define your age cohort.
Well, thank you so much, Peter.
No, thank you very much. I enjoyed our conversation.
It's a pleasure meeting you.